A bullfight brewing between two major retailers. In one corner, we got Nike, down about 17% over the past 3 months. Then we have Lululemon, down about 6% since reporting 3 months ago as well. Both names have been in a bit of a slump, more pronounced for Nike, but which is heading potentially for a turnaround? Joining us now to make the case for Nike, Ike Boruchow, senior equity analyst with Wells Fargo Securities. He's got an overweight rating and a $125 price target on that stock. And Cowen's John Kernan has an outperform rating on Lululemon with a $553 price target there. Why don't we just go ahead, Ike, let you make the case for Nike, which has indeed had trouble since its December report, down 20% or thereabouts.
Yeah, sure. And thanks, Tyler. Look, I mean, just to be frank, we don't particularly love either name into earnings right now. We're below the street estimates for both. We think numbers are going to come down for both when we hear from these guys. But we do think Nike is a better investment. And honestly, Tyler, to keep it simple, I think it's because Nike is a story that is all about recovery, which is a characteristic of this space and at this point in the cycle that we look for: recovery on margins, innovation, and valuation. Whereas on the other side, Lulu is much more about sustaining robust results, both revenue and margins, which we believe is likely going to prove difficult as they move into 2024, and slowing growth and high multiple is always a tough bet.
Where did Nike slip, Ike?
Well, honestly, to take a step back a couple of years, I would say that the strategy management laid out in 2021 to put much more focus on the direct-to-consumer channel and kind of shun the wholesale channel has backfired. And it's caused issues not just with the P&L and profitability and revenue, but in terms of innovation in general. I think that's why you have issues with Jordan. I think that's why you have issues with the pipeline in general. I think that the good news, Tyler, is that we've kind of had, the first thing you have to do is admit you have a problem. In December, they admitted they had a problem. They announced the restructuring. They announced that they're taking a closer look at this. But that's really where things started to fall apart.
John, let's turn to you and make the case for why you think Lulu might be the better investment right now than Nike.
Yeah, sure. We're market perform on Nike with below consensus estimates. We are outperform on Lulu with well above consensus estimates for this year. I think if you take a holistic view of both the store level and omni-channel productivity of Lulu, it's hitting all-time highs, like Ike said. We think it can continue in 2024. We think management's going to hit their 2026 targets in 2025. Tyler, like you said, our price target's $553. That's 32 times fiscal 25 expected EPS. I think there's a real balance between domestic and international growth here. We have international up 28% this year. We have domestic up 15%. That's in fiscal 24. Domestic's the whole business is going to get a nice lift from a 53rd week, which we think the street is mismodeling. And China is a new source of high margin growth. We model China up 35% in fiscal 24 to 1.5 billion. China could represent 15% of revenue by the end of this year. It means a big tailwind on the gross margin side.
Where is Lulu on serving men?
Yeah, men has fallen behind the growth of women's a bit recently, but it's 25% of the business. Still think it's a growth market for them. There has been some new entrants into the sector. Barriers to entry have fallen across this whole softline space. I think that's a big issue with Nike right now, where we favor some of the disruptors like Deckers and On and Lulu. And Lulu's also feeling some of the pressure, I think, in men's from some newer entrants in the space.
Interesting.
Just curious, though. I mean, Lulu's been out there for so long and has been sort of the athleisure of record. And now everybody else has gotten in the game. The high-end guys are manufacturing athleisure. And then Shein and Temu are offering it for a much more young and more affordable crowd. Like, how do they compete with all the newcomers to that game?
Sure. I think Lulu leads the space in innovation, certainly with bio-based materials, new recycled materials, emerging AI applications. There's use cases for personalization. Their inventory management has been very strong. Their gross margin is at all-time highs right now. The category expansion has worked very well for them, and there's a lot of newness. So they've used scale to their benefit. Their gross margins at all-time highs. They are the premium player in the athleisure space.
So, Ike, I found it amusing, maybe ironic, that Nike has been criticized for see-through baseball uniforms, something that Lululemon had been charged with some years ago. Not baseball uniforms, more yoga pants. Comment on that, if you don't mind.
Yeah, I mean, I think that's a small, piece of the pie, Tyler. What I'll do is go back to, I like with what John is saying. I agree with everything that John's saying. I think he's spot on. I think where maybe we're differing is I think the rate of change on the Lulu story from here is going to slow, and I think that you guys alluded to it. I think competition. I've covered the stock since the IPO. It's the first time I've ever actually considered competition from some of the emerging concepts as really having an impact.
Yeah.
I think some of the drivers of North America, I think John's spot on with China. We worry about North America and the U.S., and I think that's where we see some of the growth and potentially
I don't see Lulu
some of the
doing
margin
it.
pitfalls.
I don't see Lulu doing it, Ike, but would Nike buy Vuori?
Yeah, can't comment on that. I think Vuori, Alo, those types of concepts are definitely disrupting the space to some extent. I think that's part of the problem.
Got to leave it there. Ike Boruchow, John Kernan, thanks.